I'm Ava Makina, and this is the Coin Daily. Crypto is still defying the playbook. Traditional assets are flashing risk-off signals, but Ethereum just ripped 4% higher to about $2,410, and Bitcoin held its rebound above 78,000. These numbers should be a signal of strength, but something underneath still feels stuck. We're seeing price resilience in the majors, not the breadth or breakout energy that would mark a true regime shift. The core split tonight. Bitcoin and Ethereum look strong, but under the surface, crypto is boxed in by low volatility, muted internals, and a tape that refuses to break clean in either direction. The question isn't just what's moving, it's whether this resilience has real legs. Ethereum's surge is the cleanest example of that resilience on the board tonight. It didn't need its own news to add 4%, just enough buyers to push price back up the range. But as Ethereum rallies faster than almost any other major, the speed that pushed it to 2,410 doesn't erase what's unresolved underneath. Ethereum just staged one of its sharpest daily rallies this month, jumping over 4% to about 2,410. That's a clean move, pulling Ethereum back from the early April lows near 2,300 and putting it right at the top of its recent range. There's no headline catalyst here, just renewed risk appetite across the majors, but that kind of speed in a single session makes Ethereum the headline mover in crypto tonight. The catch is clear. The run happened without an Ethereum-specific trigger, and it raises an immediate question. Can Ethereum hold this area after such a fast sprint? Or does it risk fading the move just as quickly? That acceleration in Ethereum feels like proof that crypto can still surprise to the upside, even in a low-volume tape. But the bigger story may be underneath, where exchanges are racing to define the next battleground for trading tech itself. Bybit, crypto's second largest exchange by volume, just rolled out its new Model Context Protocol. Call it MCP. That sounds technical, but the real angle is that Bybit wants to make it easier for professional traders and developers to plug AI agents straight into the trading engine, instead of patchworking custom links for every model or tool. Instead of another retail product launch, this is Bybit betting on infrastructure, giving advanced desks a shared foundation for building fast, automated strategies. It's not pitched as a mass market move, but it's a statement. Leading exchanges see AI as a technical arms race, and they're racing to control the plumbing. Now the question is whether this kind of AI-to-exchange setup becomes a niche feature, or just the way serious trading gets built going forward. The headline flow is exchanges leveling up and majors holding their floor, but in the actual market, some altcoins are quietly setting up outside the headlines. One of the tidiest setups today is Polkadot. Polkadot just shifted its entire range higher, pushing support from $1.27 up to $1.30 and holding just above that line after repeated tests. It's a clean structure. No breakout yet, but a market that looks stronger than it did a week ago. On Polkadot's chart, support has edged up from roughly 127 toward 130, while resistance sits near 131. The latest close is around 130, keeping price near support after that rejection, so this still reads as a tight range rather than a breakout. The range has shifted, but conviction hasn't. Polkadot is parked right at support, with every move into 131 still meeting sellers. If this floor fails, that higher reset loses its steam. Until then, Polkadot is one of the cleaner altcoins still coiling for a decision. Major coins are lifting, alts are setting up, but the real question underneath is whether any of this points to a regime shift, or if it's just the tape rolling through another fake-out. Bitcoin is back at 78,000, pressed right against the resistance we've been tracking for days. The failed breakout attempt is obvious on price, but the setup hasn't resolved. Support is still clear, but so is the ceiling. What's building isn't just about levels. It's the tension between the headline hold and what's happening under the surface. Bitcoin's candlestick chart shows support at 75,000 and resistance at 78,300. The last close sits at 78,263. Right beneath resistance, still boxed in. Price is holding up, but there's no clean breakout. But the price structure is only half the story. The dashboard under the hood still shows a compressed market. Not the signal of broad risk-off, just a market that won't tip either way. The dashboard puts stress above 54%, with weak breadth showing 3 advancing versus 5 declining, and volatility still in a low regime. Funding remains positive, so longs are paying to hold positions. Liquidations are elevated, but the tape still hasn't broken. So Bitcoin's test isn't just about holding support. It's about whether buyers can force through resistance while breadth still leans negative. Until either side cracks, the regime question stays wide open. For now, the tape is reflecting strength, but still refusing to confirm it. Bitcoin's ceiling won't break, and the market is feeling boxed in. But in Solana, the decision point is more immediate. It's right at the level traders have been watching for weeks. Solana is also pressing a key test. Price is sitting right near 88.69, which leaves the market leaning on a resistance band that now has to prove it can become support. On Solana's candlestick chart, support is marked around 84.50, with resistance at 88.60. That defines the range here, and keeps attention on whether price can hold support or press into resistance from this level. Beyond the candlesticks, this visual highlights the key levels on the chart, giving traders a cleaner read on where support sits and where resistance could cap the next move. The infographic puts Solana's current price at 88.61, with key resistance at 88.69, break target at 88.78, and the moving average cluster right around that zone. This is where traders need to see the level flip. The trigger is binary. Solana needs to hold above 88.69 and keep closing away from that band for the breakout to count. Failure means quick rejection back into the old box. The reward for patience here is clarity on just how committed buyers really are. If Solana is the upside test, AAVE is the name where the floor is on the line. The setup there is about whether the market is ready to defend one last shelf before a true breakdown. AAVE is boxed between 2 levels, support right at 93.64 and a stubborn ceiling that keeps repelling every bounce. The market already tried and failed to turn this into a trend higher. Now, the only question that matters is whether the support shelf holds or gives out. The broader AAVE candlestick view still shows a boxed-in market, with support around 91.40 and resistance near 95.50. That wider range matters because, even with a nearby short-term shelf, this chart says AAVE still has overhead to clear before structure really changes. That is why the next visual matters. It tightens the frame from the wider range into the immediate decision zone traders are watching right now. AAVE's infographic pins the current price at 93.83. Key resistance sits at 93.89, with the hold target at 93.64, defining the pivot between failed breakdown and another squeeze setup. Bottom line, if AAVE can defend the shelf and clear the 93.89 ceiling, the squeeze could reload. If support fails, the next flush could be sharp. This is one of the most binary setups on the board, with outcome likely decided in the next session. AAVE is holding a last shelf, but SUI's structure is even tighter. The whole tape is watching for a move out of this compression. SUI has compressed into maybe the most crowded cluster of pivots and moving averages shown this month. Price closed almost exactly at 96.84, right on top of the knot between 96.83 and 96.86. This is now the tightest decision band on the board, and the next break likely decides the next meaningful move. The candlestick chart for SUI confirms the compression. Support marked at 94.46, resistance at 96.95, and price wedged just below the top. Sellers and buyers locked in, but the range isn't cracked yet. The infographic stacks those reference levels even tighter. Multiple points converge right in this zone, meaning confirmation or rejection will come quickly from here. SUI's infographic sets current price at 96.84, with the resistance band at 96.84 to 96.86, break target at 96.89, and hold target at 96.76. The trigger is immediate. Either price is accepted above the band or rejected and rolled lower. In plain terms, if SUI holds and clears 96.89, the move could squeeze up fast. If rejected, the rotation likely runs right back toward the 94.46 floor. This is peak compression. Resolution is close, so that's where the tape stands. Majors are still holding up, even flexing in Ethereum's case. But what's underneath is a market waiting for confirmation, not a full regime shift. The setups that matter most look binary: AAVE on the floor, SUI boxed in, Bitcoin at the top of the range. We end tonight with the same split at the core: headline resilience, muted breadth, and no clear signs that real expansion is already underway. What breaks first, and which move decides whether this was true strength or just another temporary stall? We'll be here for the first clean outcome. Which setup gives the first real answer? AAVE holding the floor, SUI breaking the band, or does Bitcoin crack the range instead? Subscribe and you'll get this every evening, plus shorts throughout the day whenever something moves.